CPA. There's a lot that I want to go over today, a lot of new tax developments. So I want to go over some of the tax headlines related to crypto, digital assets, and then just some things that I'm seeing in my practice and just some developments that I'm seeing with the IRS related to digital assets. I want to hit on that too. There's a lot to go over, so let's get right into it. I'll start here by sharing my screen and we'll get into the first headline that I think is interesting and relevant here, and that is Kraken loses bid to block IRS tax probe of crypto gains. So basically, we've seen the IRS, they've done this with many exchanges. Kraken's the latest exchange where they basically are going after taxpayers' records and are collecting that to review it with the goal of finding people that are underreporting. So you'll see here it says the IRS has said it wants information on Kraken accounts that did at least 20K of crypto trading in a single year from 2016 to 2020. So the first thing is they're going back past the statute of limitations all the way to 2016, and it's because they're targeting people that are not reporting or significantly underreporting that they're probably going to go after, even if it's past the statute of limitations, because there's no statute on tax fraud. So, we've seen this on many different exchanges for years now, them collecting records. Even this article references, they went after Coinbase files. It's hard to believe this much time has went by, but they went after the Coinbase exchange transaction records 6 years ago. So this is how long the IRS has been going to exchanges and collecting information on them. So look, if you have transactions that took place on Kraken and you're not compliant, you should assume the IRS has that information. But really, what I encourage taxpayers to do is to take these considerations even one step further. And that's to consider, a lot of people believe that the blockchain is anonymous. If I'm trading in non-custodial wallets, I don't have to claim this activity because the IRS doesn't know I own this wallet, and there's no 1099s going out on it. There's no way for them to know about these transactions. Well, when they go and they get a taxpayer's records from Kraken, I assume that's their transaction histories as well as their withdrawals off the exchange, deposits into the exchange. From that, they're able to see your wallet addresses, and it's just a matter of tracking and tracing the blockchain, and they can start to get a very good picture on which wallets you do actually own. So if you have transactions on Kraken that you weren't claiming, I think this should raise a huge concern for you as a taxpayer, and you should start to work with the CPA firm on getting into tax compliance. Additionally, if you have transactions on Kraken and maybe you were claiming those transactions on Kraken, but there were some transactions on non-custodial wallets that you didn't claim that activity, then you transferred it in or out of Kraken as an on or off ramp. That can become a huge tax issue too, because all of this data is going to be going to the IRS. So expect to see more of this. Expect to see more data gathered by the IRS. This is a trend now that's been going on for over half a decade. So I would expect them to continue to collect more and more information from tax authorities, and for this information to get shared internationally between different taxing authorities through various agreements that have been set up across different international tax jurisdictions. So this action with Kraken comes on the heels of just more of crypto in the news, with some comments from President Biden. So you'll see here, President Biden promotes a fair tax system, new rules to tax crypto. So this is more just about, closing the loophole, as President Biden likes to say, where cryptocurrency, since it's taxed as property, currently wash sales rules don't apply to that because wash sales apply to securities. So, this is just more of Biden putting out negative press about the crypto industry, saying that we're tax cheats, saying that we're using tax loopholes to not pay our fair share in taxes, and basically advocating to close some of those, what he refers to as tax loopholes, and to just overall start to focus on getting more tax dollars from the crypto industry. So President Biden has made a promise regarding the crypto industry and its traders ahead of his upcoming campaign. So it just seems like crypto taxes is going to be a huge campaign issue across the board here. We know President Biden previously tweeted these loopholes cost the government $18 billion in lost revenue. So this is just a huge area of focus on them. And now, this is coming on the heels of them getting this data from Kraken. So there's just a lot of moving pieces that we're seeing on this tax enforcement front. Indeed, for a while, crypto traders were able to evade taxes by exploiting this loophole. I don't really agree with that, the framing of that. I don't really think you're evading taxes if you're following the tax rules as they're outlined, but a lot of people don't like that wash sales don't apply to cryptocurrencies. So they say they want to make the system fair by closing loopholes for cryptocurrency traders and hedge fund managers. A lot of people argue that the taxation system for cryptocurrency, with it being taxed as property, is not fair because, you may want to go and buy a coffee with the cryptocurrency, and that's going to be a taxable event due to it being taxed as property. That creates an administrative burden on taxpayers and also an overall tax burden for every transaction being taxed. So I think wash sales was one of the few things that worked in the favor of crypto investors, given the taxation structure that the IRS has applied to crypto. But apparently, there's many people out there, including Biden, that views this as evading taxes and taking unfair tax loopholes. And overall, what you need to know is that wash sales are a big focus for future tax regulation, and it just doesn't seem like it's going to be something that's going away. Let's just see if there's anything else here relevant. So it's much more about just closing the loophole here, $18 billion. And then they go over discussing exactly what wash sales are. So, like I've been telling you guys for years, wash sales with crypto is a powerful tax planning tool, especially in bear markets. It's probably not going to be around forever. So, it's just a matter of time before they come to a deal here and probably exclude wash sales in the future. So this is something that we'll be watching right now. There's no legislation on this, but something that we definitely need to be watching closely, because when that gets closed up, it's going to definitely hurt a lot of taxpayers that are crypto investors, but also it's going to create even a larger compliance burden on taxpayers, because you're going to have to now track any sale of crypto for a loss. We're going to have to do a look back and track this for wash sale purposes, and and do a 30-day look back on it. So it's another aspect that, if this gets implemented into our tax system, it's going to increase the compliance burden for digital asset investors for Web3 businesses. So, I think that's a point that's not raised. They're just looking at, hey, like this will make us more in taxes, but how much for you as a taxpayer, if you have thousands of trades, how much more is it going to take for you to even properly account for the wash sales for any assets that you sold at a loss? Something to consider. So let's see. So this next headline I thought was interesting. It's not exactly tax related, but this is something I think we all need to be watching. Just overall, AI in general is going to be ubiquitous in all of our lives. So it's something I'm paying a large degree of attention to. Both how can it help me as a business owner? How can it help me as a professional, as a CPA? And then also, how can it help me personally in my own personal life? And I have found many valuable uses already in ChatGPT and in other AI systems. But this is a huge risk that they're outlining here. I've heard a lot of people sort of hitting on this. This is the first I've seen it published somewhere like in Fox. So your ChatGPT account and conversations could be for sale in the dark web, how hackers are exploiting ChatGPT's data and what you can do to protect yourself. So I'm honestly not sure what this says on what you can do to protect yourself. I actually have my own suggestions on this. So yeah, over 100,000 accounts have been hijacked by info stealing malware, and then they're basically selling it on the dark web. So the United States has nearly 3,000 leaked logins. 3,000 in the grand scheme of things probably isn't that much, but this is a trend that's not dying, it's growing. So, this will probably increase in the future. So that, they want to get the chats and basically see what you're saying, see what sensitive information is in there, see what sort of thoughts and ideas that you have, and try to exploit this data for their own personal use. So, they're saying disable your chat histories and put data controls on Chat GPT. I think that this is going to lead to even larger considerations, and it's going to highlight the power and purpose behind having your own personal AI that's hosted on your own local computers, that isn't hosted by a third party, such as ChatGPT or any of these other AI systems. So you just have on your own local private computer, not connected to the internet, ChatGPT like AI system that you can use privately, where no third party, no hackers are recording your conversations, recording your thoughts, taking your sensitive information. This can be financial data, this can be personal information. There's a lot of opportunity with using AI, but feeding it all of this information and then having it stolen by hackers and even taken by third parties for various purposes, I think is a huge risk. So, I do use ChatGPT. I use some of these other systems. Really, just what I'm using them for, I'm not giving them any personal information. I'm very careful with what I do give them. Mostly what I use them now is for just general marketing and research purposes, because there are these threats with your data security associated with it. So the personal private hosted AI, I think, is the solution for this that I am exploring, and I know others are pioneering and exploring as well. So, I think that's something interesting to consider. Just know when you're chatting with ChatGPT or any of these other AIs, assume that there's someone else looking over your shoulder, and know that there's other solutions out there or that will be out there soon related to personally hosting your AI. Okay, so yeah, let's hit on this next. So here's a Reddit question, which I thought was interesting. This is one that I see a lot of people will come to me with. Has anyone amended to include their tax losses? So there's always these questions about, going back in the prior years, you've done your accounting accurate. There's some discrepancies between what you reported, and then the question becomes, should you amend your return? Number one thing I'll say here is, a lot of times people think about amending with their accounting and they're like, maybe I shouldn't go back into my accounting because I don't want to amend. And they sort of convolute these two things. Always keep these two considerations separate. For me, step number one, before we even really think about tax amendments or anything from a tax perspective, is getting your accounting accurate. So just doing your accounting accurate from the first year you had trades through your current period to ensure that all of your cumulative cost basis data is accurate. That's really our first step. Once we have accurate accounting records through all of your tax years, then we can look at the tax implications related to your gains and losses and your income for each year, compare that to what you filed on your returns, and then make this assessment on whether or not you should amend. Now, just because there's a discrepancy on your return still doesn't necessarily mean you should amend it. And I think that this person here is a pretty good example of that, because you'll see what they said here. I'm considering amending my 2021 tax return to include a 1K crypto loss from MetaMask. Do you think I should do it? I didn't get any. Now, this part's irrelevant. I didn't get any 1099s from Coinbase reporting, meaning, I'll have to add this to my 8949. So the reason that I would probably lean to not claiming that, now this is all taxpayer dependent. This taxpayer very well may claim this because it's material to them, but we're talking about $1,000 loss. So, if your return has $500,000 of taxable income and we're talking about amending for $1,000 loss, it's probably not worth it. It's likely immaterial. Especially if it's in the loss category. You're gonna probably pay a CPA more to handle that tax amendment for you than you're gonna get back in amending the return. Now, if they would come and they would say, hey, I have a $15,000 gain that I didn't claim, that's a different story. That's a material gain that you should have claimed that you didn't. That's something we would want to amend for and get into compliance with. So really, when I see this question, the number one thing is, taking a practical approach. If this return was already filed, are the changes that you're considering due to any adjustments that you made in your accounting, are they material in nature? Do they have a material impact to the, bottom line when it comes to your taxes? If the answer is yes, then you have to amend. If the answer is no, like is very likely in this case here, then you may be able to forego doing that tax amendment. Again, I will point out that whether or not you amend, it's important to do your accounting accurate for every year, because you need those accurate records, and you also need to make sure that your cumulative cost basis data is accurate. Now, whether or not you get 1099s is irrelevant, because you should, the 1099s shouldn't be the reason you file or don't file. You should be filing based off of your facts and circumstances, not based off of if a third party is going to report on you. So, that's sort of my 2 cents on that. Now, this was so those were most of the headlines that I wanted to cover this week. I thought those were some interesting ones that really are just highlighting a trend that we're seeing, where there's going to be a big push during this election cycle, and just overall for more changes to the tax rules related to cryptocurrency that are going to probably make it tougher on investors when it comes to things like wash sales, and just an overall renewed focus on the space in terms of pushing more compliance, like we're seeing with the Kraken audits, and taking all that information from Kraken. Now, another development which sort of goes along with this theme, which we've also seen, I guess, probably in about the last week or so, is that the digital asset question that you're probably aware of, because it's been on the 1040 now for, I would have to look exactly how long, but for years now it's been on the 1040, and they've been revising it every year. I've done videos throughout all the years going over all the intricacies of that. I'm not gonna get into all that. But now that digital asset question that basically, in so many words, is asking, did you have digital asset transactions for the year? That's only been on the 1040. The 1040 is for personal tax filings. Now that question, there's a form of that question that's going on company tax filings. So partnership tax filings, C corporation tax filings, S corporation tax filings are also now going to have digital asset tax questions on it. And I can show you an example of this here. Now, obviously across the 1120, 1065, 1120S, they're all going to be a little bit different and on different pages and different lines. In terms of their substance, they're all going to be very similar. So you'll see here, just making sure this is sharing, you'll see here on line 30, at any time during this tax year, did the partnership receive as a reward award payment for property or services, or sell, exchange, or otherwise dispose of a digital asset? And then you got to check yes. So this is just another step towards getting that compliance and getting this record of you under penalties of perjury committing one way or another as to whether or not you have digital asset transactions. Before, this was just on the personal. Now they've expanded it to focus on partnerships and corporations. And this is because of the trend with digital assets. It's proliferating. It's went just from crypto and digital assets into Web3. So the use of digital asset transactions in the business regard has just really exploded over the past years. And as a result, so has the IRS focus at the business level for digital assets. So this is just, another compliance consideration now for business owners. And we're going to have to make sure that we answer this question appropriately and then report everything appropriately for taxes related to this. So, that's just another area to consider. They're not just focused on the personal returns, they're going to be focused on the business returns as well. This should come as no surprise at all. So, just something else to keep in mind. So those were the big items that I wanted to go over this week regarding the headlines and some of the tax news that we're seeing with the updates on the drafts of the partnership returns and the corporate returns. I think these are huge developments. If you like this today and you found this valuable, the information I'm providing here, be sure to tune in next week. Additionally, every Tuesday, I have a newsletter that goes out called the Digital Asset Digest. We cover a lot of the topics that are similar to what I cover here on these lives, in addition to other relevant, valuable information delivered straight to your inbox every week. So if that's something that interests you, you can go to my website, CryptoCPA.com. Under the resources section, click newsletter sign up, and you can sign up right there, get those delivered right to your inbox. Otherwise, stay tuned for next week. I'll be back with more updates and more insights. Until next time, I'm Patrick Camuso, signing off.